G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to go over an example of last week's pound and pound yen pairs just to show the basic market maker template, how this pattern or these templates show up over and over again in the markets, and how we can break that down into our 12 candle rule or whatever time you're trading at to break this down into the simplest of strategies, so that when you can identify, number one, if you're in an up or a down template, number two, whereabouts in that template you're at, a level 1, level 2, or level 3, and then also again talking about never counter trending the level 1 straightaway trades and trying to identify the candle confirmations for your highest possibility trade setups, if indeed the opportunities present in the time that you're at the screen. So we've in the past talked about the basic market maker template. If you're in North America, that's Sunday, Monday, or Friday, Monday reversal. Sometimes it can be a Monday, Tuesday, but just in this basic example, we're looking at how Sunday, Monday, the market went into consolidation, stop hunt low, rise, consolidation, stop hunt low, rise until we get into that level 3, drop down into the straightaway, consolidation again. And again, if we're in a up market, typically what I will look for is a stop hunt to the downside and then the rise. Consolidation, we can even see it break the top of the Asian range, stop hunt the low of the range, and then rise. And then in the level 3, we often will see aggressive hits to the top and bottom before the market consolidates again and then rolls over into the reversal into the downward market again, where we'll look for potentially a stop hunt high and then a resume of the downtrend. So last week in the British pound and the pound yen, the two main pairs that I tend to follow, we see that Friday gave us the high potential of a level 3 or a reversal possibly setting up. Now again, there's people out there who will say this is all fine to look at in retrospect, but what I'm trying to demonstrate to you today is how to break that down day by day so that you can prepare going into the next session in that 12 candle rule that we've talked about, how to identify potentially the template that you're in, and then also how I use that 12 candle rule to look for candle confirmation patterns. But you can see that we had aggressive hits to the top and the bottom on Friday. Then the market pulled back into the close and then opened on a gap, and that gap actually gave us our W pattern going into Monday. Now Monday, we saw that the market went into a straightaway. We talked about this in the past, why you never counter trend the level 1 trade. It will often go into a straightaway, which retail traders, if they lift their stops, don't use stops, have over leveraged, assuming that trade's going to roll over and continue down, would go into major losses in that straightaway. Then the market pulled back and consolidated, stop hunted to the downside, hit the stops high that shorted that, hit the downside again, rose up, pulled back, and then continued and gave us a W formation heading into the US close, where it rose again. But again, these dotted lines and solid lines are 25 pip increments. The blue box is the Asia consolidation, the high and low of Asia. As we got to Wednesday, we saw the market aggressively hit the top. Now you'll notice again that level 1's a straightaway. In the level 2, the stop hunt was to the downside first before it rose to take out the high of the day and then the high of Monday. Whereas on Wednesday, we see the stop hunt to the top side first before it aggressively returned to take out the low of the London Open and the Europe Open. The market then proceeded to consolidate into Thursday, where they again hit the stops to the top side, jammed in higher level longs. So you can see the market ramming longs, attracting more longs into the high before it rolled over into the straightaway. Again, level 1 out of the level 3, same as on Monday. Traders who are looking for that to follow through, counter trending and not using stops, lifting their stops, averaging into losers, all those things that retail traders are known to do would then be accumulating even bigger losses. And then going into payrolls Friday, we see the market stop hunt to the top side, roll over, and again take on a straightaway trade formation going into payrolls. So again, just demonstrating the template, the reversal on Friday, day 1 of rise, day 2 on Tuesday, day 3 of rise on Wednesday, the reversal occurring on Thursday where they've taken out the previous day, not only the previous day's low, so a lower high and a lower low, but also the swing low of the stop hunt from Wednesday, and then resuming that downward template on payrolls Friday. We'll pop this over to the pound. Just move this up. So we see the pound, the same similar pattern on the pound. We saw the aggressive stop hunt to the downside, then to the upside, then to the downside again on the pound, demonstrating that level 3 vertical stop hunting, aggressive on both sides. Then the W formation heading into Monday, the straightaway to take out Friday's high, 3 pushes down, stop hunting the low of the day first before it resumed upwards. So we talked about the W, the V, and then the M pattern. So which we didn't show you the M pattern, and we're going to get down. Actually, we'll do that while we're here on the pound yen. We'll widen this apart, and we'll go into that 12 candle window to look at that. So on Monday, we saw the potential that this was a level 3. On Friday, the reversal day, we saw the market gap on the open. That's a zone shift of 25 pips on top of the W, resting and then continuing to move higher into the Europe and London Open before it pulled back in 3 candles, which is our stop hunt candle pattern. A swing to form a new low of the day with a pin before it broke out long, and to continue that uptrend. Tuesday, again, that 12 candle window, we see pins and a low getting hit first to give us a W formation in that Europe and London Open, and again moving up approximately 100 pips from that Europe and London Open. Then we go into the pullback and consolidation into Asia. So we're now assuming we're in an up template. So we are now looking for stop hunts to the downside for long trades. The market aggressively moves out of the box, gives us our stop hunt pattern. This 3 candle push out of the box into a pin right on the Europe Open will often be a trap. This pattern where you'll see the bear candle go to the low of the pin bar in the Europe Open shows up quite a bit. You can go back and check your charts. The second pin in the London Open is the pin that we're looking for. Now in this particular case, the market moved up 25 pips before it gave us a reversal candle. That's a telltale exit sign. Usually if this is going to move up 50 pips, it will move to the high of the day first before it even gives us any sign of a bear candle. That market then traded into a range before it stop hunted again the new low of the day from London before it formed and gave us a W pattern into the US close. The 12 candle window here gave us a pin low, which yielded 25 pips for traders to either take profit, go to break even. Again, that bear candle is a signal to either exit the trade or move to break even after 25 pips of movement. The next day, again, we have higher highs and higher lows. We're in looking for stop hunts low coming out of the box. In an up market, we see the stop hunt occur aggressively to the top side and issue the M formation going into the London Open with pins. Again, stops aggressively hitting the top tells us that we potentially may be in a level 3. You can trade in either direction if your candle patterns give you a reason to enter that trade. And again, this trade moved approximately 25 pips for traders to go to break even. If they didn't take anything off the table, they may have been stopped out at break even, or they may have held that for 50. But again, that's the trader's discretion. But that 12 candle window again gave us the trade that we were looking for. Savvy traders would have looked to have sold somewhere up in the pin region, especially when they're using the London Open. That second lower pin is the second candle of the London Open. So some traders would have looked to have sold up in that upper region. Again, we go into the close, and this aggressive nature of hitting the top and the downside before it consolidated gave us some signals that we may potentially be in a level 3. Monday, Tuesday, Wednesday, we're considering that it could be a midweek reversal setup as the market has pushed into its third higher day. And we see the market move sideways into the high of the range before again, if we're in an up template, we'd expect this stop hunt to the downside, but in level 3 it hit the top side first. And again, coming into the fourth day of trade, the stop hunt was to the top side. This bull candle with the pin on top and the consolidation at the open of the market is another pattern for traders to study. As you can see, that market held the highs of the day before it rolled over and gave us another M pattern formation. Now again, smart traders would be looking to sell up around the closes or the highs of these bull candles. They are able to go to break even fairly quickly once the market rolls over. And that 12 candle window gave us an opportunity to either enter in on a bull candle, short of a bull candle, or at the high of a bull candle. Some traders may have wanted to wait until they had a confirmation of a breakdown. The problem with that obviously is that you need to sit through another level of trade. And if you're confident that you are in a level 3 and that reversal is happening, this is where, again, as your trading skills improve with identifying these levels of the template and then the candle patterns, then you can start to look at selling higher as these markets roll over, or buying lower if they're going up. So again, that market then rolled over into a straightaway. Friday payrolls, we had 3 levels of rise going into the Europe Open, culminating again in that bull candle similar to what we saw on Thursday, and the market moving sideways into consolidation before it rolled over and proceeded to continue with the downtrend. So when we know we're coming out of that level 3 from Wednesday and the market has made lower highs and lower lows, we expect the stop hunt then to therefore be to the top side and give us that A formation peak, similar to what we saw going up, where we saw the market hitting the stops on the downside first before it rose. So again, coming back to the W, V, V, M formation, and then the A peak heading into Friday, Monday, we don't see any evidence of a level 3 just yet, so I will be expecting potentially stop hunt to the upside. If we see the market stop hunt to the downside first, it's possible we could see a Friday, Monday reversal set up for Tuesday to resume the uptrend. The way the market has rolled over, I'm expecting stop hunt high and a continue back down towards last week's swing low. So again, just going back to that market maker template, the market consolidates, moves down into the level 3 reversal. We expect the stop hunt low, the V stop, rise, consolidation, stop hunt low, rise, consolidation, aggressive hitting of the upper and lower boundaries before it gives us our M formation, rolls over, goes sideways, and continues into that downward move. Again, similar on the pound as I said, but print off your charts, see if you can identify similar patterns for not only level 3 reversals, but also making sure that you don't counter trend a level 1 straight away out of a level 3. Sometimes you'll see a 2-week cycle, and again, when that happens, the level 3 can still show up, and then you'll see the market give a reset where it will give a new peak formation high or a peak formation low before it continues in the original drive of the previous week. So hopefully you got some value from today's video, traders. Again, study the pairs that you're following before you take a trade. Make sure you know which template you're in, an up or a down template, and then try to identify which level you may be in making sure that you don't counter trend a level 1 trade out of a level 3 reversal. So stay disciplined, traders, stay focused, keep getting better, study these charts, study your own 12 candles, your patterns, your trading setups, master them. You can identify that when you get this down, you're only looking at a 1-bar stop, 15 to 20 pips max, but they have lots of room for asymmetrical risk reward. It's just a matter of keep getting better and staying focused, staying disciplined, and sticking to your plan. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.